Nvidia's quarter four revenue is down over 21% year over year, yet the stock price is up over 8% after the company reported earnings. In today's episode, I want to take a closer look at why. So let's get started. All right, so we can see quarterly revenue for this company was $6.05 billion, down 21% versus a year ago. For the full fiscal year of 2023, revenue was $26.97 billion, flat from a year ago. So we can see not much growth from this company. If now, like I mentioned, stock price is up about 8.7% after hours after the company reported earnings. In the past year, the stock is down roughly 7.3%. So it's pretty interesting, right? The pretty much revenue has been flat. And now if we take a closer look on the yearly basis, stock price to some extent will be flat after this after hours return. Year to date, though, the stock is up for over 45%, not counting the growth right now. So definitely an interesting time for this tech giant. So I want to first take a closer look at reason number one why I believe stock price is up after earnings. And I want to say the gaming market. And the gaming market was probably the weakest portion for Nvidia in the past few quarters. We can see how much this has decreased. In quarter one of fiscal year of 2023, this was a $3.6 billion market for them. Then the following quarter, it dropped to $2 billion. The following quarter, it dropped even more to $1.5, and now it's starting to pick back up. So the main reason it dropped is there was this huge kind of lackluster demand in the crypto market due to crypto mining no longer being profitable. Everybody left that. There was a huge influx of crypto cards, and this led to a huge decline in the gaming segment. Then we also got hit with the over inventory correction in the consumer side. It does seem Nvidia was a little bit more aggressive in the inventory correction, that they do believe in the gaming market. Now they're going to start seeing sequential growth. They saw it in quarter four, right? A nice bump up, and they expect sequential growth in quarter one of fiscal year of 2023. So one of the main things here is Nvidia, to some extent, the gaming market has bottomed. And with that bottoming out, it kind of relieves a lot of stress for investors. And if we take a closer look at non-GAAP gross margins for this company, we can see quarter four, or the most recent quarter, was 66.1%. We can see a quarter ago, quarter three of fiscal year, was 56.1%. And if we take a closer look at quarter two of fiscal year 2023, gross margins were 46%. So it does seem like for Nvidia, at least right now, the over inventory correction is pretty much done. Now they're able to focus on improving their gross margins, and they're able to start to see growth in the gaming side. Because with the over inventory correction, what was happening is Nvidia had to get rid of a lot of inventory. Sometimes they might have to do it at a sell price and causing those gross margins to decrease dramatically. Now with that ending and the gaming bottoming, we can expect gross margins improvement from here on out. So here we can see the outlook for the first quarter of 2023 is about $6.5 billion. Now that is going to be a nice amount of growth quarter over quarter. Remember, we are about $6 billion right now. The other thing we see is non-GAAP gross margins are going to stay within that 66.5%. So again, I do believe this just kind of tells us that, hey, the gaming is bottoming out and is good news for Nvidia. So that's reason number one. Before we go any further, I want to thank you for watching, and I need your help to reach my goal of 30,000 subscribers by the end of the year. So if you can do me a favor, hit that subscribe button and thumbs up. Also, if you want to learn more about the semiconductor market, make sure to check out the website moresemiinvesting.com. That's more with M-O-O-R-E. This is a membership for those that want to learn about the semiconductor market. We have great pipeline for the next few weeks, so make sure to check it out, and it's 33% off on the yearly membership if you sign up before Sunday. Finally, I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode. All right, so reason number two, in my opinion, I was going to go with data center here, but I'm going to take a step back and take a closer look at the automotive market. We can see the automotive market is continuing to see strong growth. In trailing 12 months, it has yet to pass $1 billion in run rate, but I do believe by next quarter, that's going to be an easy battle to pass. I do believe in quarter one of fiscal year 2023, the auto industry in the trailing 12 months will be a $1 billion annual run rate for Nvidia. And I do believe the growth from there is going to continue. Nvidia provides a lot of great solutions for the automotive market. They do share some great insight in their press release where they mention, hey, automotive grew 135% year over year, up 17% from previous quarter, and for the full year is up 60% to a record 903 million. I'm telling you guys, next quarter, we're seeing this at a $1 billion run rate. They did announce a strategic partnership with Foxconn, and they are also increasing the simulation tools for robotics. This is why I believe the automotive market is big, is because it not only focuses in actual automotive and autonomous driving, but it also focuses on robotics. So the third reason, it was the data center market. And I do believe here in the data center market, I am a little bit shocked that the data center market came in a little bit weaker than many expected. It was actually down quarter over quarter. I believe this is their first quarter of that happening, and it might have some investors worried. They did mention that on a sequential basis, one of the biggest things are sales in China still impacting the company due to the overall market still being weak at the moment. But they are excited about their new AI solutions, NVIDIA AI Cloud Services. This is something they have explained in the past, but for those that are not familiar, NVIDIA AI Cloud Service offering is the following. NVIDIA is partnering with leading cloud service providers to offer AI as a service that provides enterprises access to NVIDIA's world-leading AI platforms. Customers will be able to engage each layer of NVIDIA AI, the AI supercomputer, acceleration libraries, software, or pre-trained generative AI models as cloud service. So NVIDIA is now not just a chip company, right? And this is what I think a lot of investors are excited about. This is more than a chip company. Now it's also a clouding company. It's a software company, and they are releasing great solutions from this. During the earnings call, they did mention that investors should really tune in to GTC, which is going to be held virtually on March 20th to 23rd. There is going to be a great keynote, which is going to explain a lot of new software solutions that NVIDIA is going to be offering in the next few quarters. We're also going to hear about probably the new CPU that NVIDIA is developing, the Grace. So again, I do believe the biggest driver here, though, for NVIDIA's stock price to be up 8% is this is the bottom of the gaming market, and that is going to do so well for the margins. This company can continue to focus and then continue to build a nice amount of solutions in the AI market. Unfortunately, I do want to say, because the AI industry is strong right now and this whole kind of popularity with generative AI, there might be some hype in the stock price. So in the short term, I continue to believe NVIDIA will be very volatile. In the long term, this is a no-brainer for me. Obviously, it comes for risk, but I'm willing to accept those risks. So take care, have a good day, and see you next time.